sanitary ware continues to demonstrate consistent profits and cash flows quarter after quarter despite the evolving business landscape. Operating performance in Q1 FY23 once again turned out healthy owing to a sustained pickup in consumer demand. The fundamental drivers of growth are intact and the recent spike in natural gas prices is unlikely to have a major impact on its core business. Let's take a look at the results. Revenue for Q1 jumped 78% year-on-year to 396 crores due to a favourable base. Rising input costs dragged the gross margins. The company reported a jump in inward freight, gas and labour costs. But the operating margins benefited from better capacity utilisation trends. Cera enjoys a dominant market presence in the sanitary ware and faucetware segments, which together contribute nearly 90% to its top line. Q1 revenue for the two sub-segments registered a growth of 89% and 99% respectively. Tiles business, on the other hand, was quite sluggish and witnessed an increase of just 9% YOY. For Q1 FY23, 54% of the top line came from sanitary ware, 35% from faucetware, tiles represented 12% and wellness contributed the remaining 1%. Rising commodity prices, whether it's natural gas or metals, have been impacting the margins across building material industry. Notably, the gas comprised only 3% of total cost in the quarter for Cera, as the core businesses of sanitary ware and faucetware do not require much power like tile or cement manufacturing. In the last 12 to 15 months, the company has taken 20 to 30% price hikes across product categories to mitigate cost pressures. Demand outlook appears fairly strong across product categories. The production for faucetware in July 22 stood at around 3 lakh pieces, close to its all-time high. Management expects demand momentum to sustain over the next 2 to 3 quarters and hopes to end the current fiscal year with a turnover of 1700 to 1800 crores. The company continues to operate at optimum capacity utilization levels of over 100% across both sanitary ware and faucetware segments. The expansion for faucetware commenced in July 22. Now the investment will enhance the capacity by 1 lakh pieces, taking the total manufacturing capacity to 4 lakh pieces per month by Q1 of FY24. Besides this, Cera also plans to set up a new greenfield facility for sanitary ware. The company is currently conducting due diligence and feasibility study for expansion on the shortlisted land parcels. Cera will share a detailed roadmap of the planned capital expenditure in sanitary ware business once it completes the land acquisition. Cera is one of those companies in the building material sector that have multiple years of steady growth potential. We remain optimistic on the long-term prospects owing to its high brand salience, comprehensive product offerings and an established network of distribution. The company has superior operational execution among its peers, which gets reflected through its margins, high return ratios and cash-rich balance sheet. Moreover, the company is a market leader across 2 key product categories and is well positioned to capitalize on the emerging trends in the housing sector. While the current trading valuation multiples appear a little elevated, the value created from Cera's consistent revenue growth along with an expansion of operating margins will continue in the coming years, and therefore long-term investors should look to accumulate this quality stock on every correction.